Good afternoon, everybody. Welcome to our Short Verticals webcast. I'm Connie Hill. Happy that you would join me here today. Hope everybody feels welcome. Whether you know about short verticals, you're trying to pick it up, or you're a veteran of short verticals. Now, I have a question for you, and I would like you to answer this in the chat. Do you feel in the current conditions that we have on the market today that we could see both bullish and bearish opportunities? That we could trade both bullish and bearish opportunities? I want to know what your thoughts are. Go ahead, put those in the chat. We're going to talk about that here today. I hope you're following me on X. I'm Connie Hill CS. We have the pleasure of having Cameron May in the chat with us here today. Cameron's a fellow coach and good friend, and we've worked together for many years, very knowledgeable. He's here to help me fill some of your questions that maybe I can't quite get to. His handle is Cameron May CS, and we'll post educational content out, different things that we see in the market. Sometimes it's charts, sometimes it's an article or a statistic, but we like to share those things with you, kind of just to give you an idea of maybe some of the things that maybe we're thinking about that might be interesting to you. So follow along, it's free. All right, let's go through our disclosures and get on with our agenda here today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for information and education only. Don't consider it a recommendation. We will be using the Paper Money software application. It's for educational and purposes. You want to maybe test it out, see how it works before you start using it on your live account. Investing involves risk, including the loss of principal. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. That's a really important concept for this class because we're selling calls, we're selling puts. You need to know that. The Paper Money application does not assign short options early. So that's one thing that's different in paper than in a live account, because you certainly can be assigned early. Past performance of any security or strategy does not guarantee future results or success. Now I'm going to go see how you guys responded here to me. The question was, do you think you can see opportunities of both bullishness and bearishness in our current market? So some are saying yes, 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 both opportunities are out there to trade. Excellent. I'm glad you kind of have that idea. I mean, yesterday, 3 out of our 4 major market indices that we pay attention to set brand new highs. Okay. We are very much in a bullish market, but we're going to see some pockets where we could be a little bit on the bearish side. We haven't had a ton of time to focus on some bearishness, so we're going to go into that a little bit more today, but we're going to look at both opportunities, bullish and bearish. Okay. If you are, somebody's having an issue with the live stream, maybe if the voice is glitchy, you might want to just kind of refresh the browser, see if that will work, and then see if it comes in steady, or if you've got a ton of stuff open, close some things down to free up that memory. All right. Always want to talk about some aspect of short verticals. This is an intermediate level class, so I make the assumption that you know some things. However, if you're newer, I want you to stick around. I want you to be able to understand as well, and so we'll talk about some aspect of short verticals in helping you understand that strategy. We always are going to look at example trades. We've got some trade management things that we've got to take a look at here today. So I have a pretty packed agenda for you. All right, let's talk about short call verticals. We're going to talk about entry signals and exit signals. We haven't had a ton of time, like I said, to focus on short verticals because we've been in really bullish market conditions. So when would we consider doing a short call vertical? Well, this is what we're going to look for technically on the screen. Now, it doesn't say downward trending stocks. However, you might put that as one of your conditions. We're looking for downward trending weak stocks, maybe that have just broken down below support, or maybe it's just pulling back from a resistance level, like it's been downward trending, has a little run up, and then starting to fall again. Or we can look for a close below the low of the high day. And some of you are familiar with the close above the high of the low day, close above the high, making sure I've got my acronym correct here. right? Where we see it just kind of pull back a little bit and pop, and we're like, oh yeah, that price closed or maybe traded above the high price of that low candle day. It's just the opposite of that. Okay, so we're going to be focusing on that when we look at a couple of bearish opportunities. And let's talk about getting out. Sometimes unwinding the trade or managing the trade can be the most difficult for people. They kind of get, okay, this is how you get into the trade, but now what do I do? Okay, so have a window. Many traders have a window of say 4 to 10 days where they say before that expiration, we need to find an exit point, meaning they don't want to stay in there the whole time up to options expiration date. Now, you might have opportunities where you want to close out early. Could there be opportunities when you don't? Yeah, that very well could be the case. That you just want to let it expire worthless because you feel like, man, there's no way it's going to get back and put me in a bad position. Okay. You can also exit a percentage of the max gain, and we frequently will do that. We'll put in an order. We'll frequently put in an order that says, hey, get us out of the trade if we've captured X percent of our credit. You might get out at a predetermined max loss position, meaning some traders might use something like, okay, if it goes against me 100%, then okay, maybe I'll get out of the trade. I was expecting to bring in this, but I don't want it to go to a max loss. Okay, so maybe identify a point, sometimes numerically. And then if the stock makes a major resistance level, we might consider saying, hey, we're wrong on that trade. We need to get out. That's when we can get into maybe changing polarity on the trade and maybe actually changing the trade up, what it's doing, maybe buying back the short leg, buy the long leg. We haven't had opportunities to do that recently. But if you do see a break of resistance, keep in mind that could signal the stock is going to start an uptrend. And usually with that break of resistance, you get a higher high. That's kind of one of the first changes you might look for. Okay, so keep those ideas in mind. Myron says, which of the 4 major indexes? Well, let's go ahead and take a look at them, Myron. And here's our SPX. How many of you use this probability cone that we talked about last week? We're going to refer to it a little bit here today. So I do have the probability cone as a study entered in on my charts, but here's the SPX. So you can see this, I've got my high bubble showing here. And, you know, all through the summer, really, June, July, August, S&P kept hitting new highs that are all-time highs, okay? So it did it yet again yesterday, all right? So yeah, definitely bullish, well above the 10-period moving average. Was down a little bit today. It looks like, man, it's fighting back. It might only be down just a sliver right now. And NDX, similar type thing yesterday, put in a brand new all-time high. And so a little pulling back here today. Now, it definitely is off its lows as well, right? It's got a green candle, so it looks like, okay, it's trying to fight off of its lows. We had that PPI come in a little bit hotter, indicating inflation was a little bit hotter than what they were expecting it to indicate. And so that drove a lot of the sell-off early this morning, was based on that kind of news. Okay, so that's the second new high one. And the Russell 2000, oh my goodness, look at that. It did, yeah. See that yesterday? New high. And if I go out here to, let's go just like say 5 years, it's not back to this previous high. So it was not an all-time high, but it is a 12-month high for what we're seeing right now with that longer dated chart. It's going to go back to our 3 months here. So it's down a little bit today. It's off its lows. We'll see how it closes. So now we've got, it is at a 12-month high, not an all-time high. And then let's look at the Dow here, $DJI. Now, it did not put in, it was close, okay? It was close to meeting its ultimate all-time high here. Didn't quite make it. And yeah, it's down here a little bit today, but definitely off its lows as well. What about the volatility? Is it moved into a higher range? Well, it really hasn't. It's still in a lower area where we're not seeing a ton of volatility, but within the market, we could still see pockets where there is volatility, individual stocks that have volatility because of their news or their nature or the kind of stock that it is, right? Sometimes biotechs can be more volatile just in general in their nature. Okay. So we kind of have a feel for what's going on in the market. The one thing I wanted to drive home was that even though we were seeing highs, new index highs on SPX and NDX, that we still could see some bearish type opportunities. We're going to entertain those. Now, what I'd like to do is give us a quick review at just following up with some of our recent trades. It's important, I think, for you as we have concerns with some of the trades and you're paper trading in your account, that those questions can get addressed. Okay, so I do hope if you're trying to practice this strategy, any of these example trades, do in your paper account. And if you're following it, you're going to learn a lot more than if you're just kind of sitting back in your chair, maybe your feet are up and you're just kind of watching like a TV show. But if you're really putting yourself in that position, man, you're going to learn a whole lot more. Okay, so as we come over here to the monitor tab, you guys know we do bullish and bearish verticals. That's all we do in this class, okay? We'll come back to the bearish ones here. We had some that we put on last week that already hit their targets, okay? So first one, CRWD, CrowdStrike. This was last week. This was the 7th of August, just a week ago in our class. We got in because it was breaking down below this support level. And it continued to slide the rest of the day, was down the next day, was down the next day, hit our profit target. We got out of the trade. Now, this one's a little interesting, and sometimes paper money can be a little interesting. And let's come over here to CrowdStrike. You can see we put it in we were filled at $1.50, which was nice. And we said we'd be happy to go buy it back at 44 cents. It gave us instead maybe at the beginning of the day, not right when the market opens. Usually that's 7:31. Now that time there is 7:43, so it'd been open for about 12 minutes. But it gave us a credit on the fill. Now that's not normal. If your paper money account does that to you, then just know, okay, it might be paper money not working to perfection. Okay, and so I did not want to say that our actual credit was $1.50 plus 15 cents. I thought, if we're just going to say, all right, let's suppose we just got our max credit of $1.50. $1.50 times 4 contracts puts us in the neighborhood of $600 of profit in a short time. Okay, really hit that target pretty quickly. And so by putting our order in, it allows us that opportunity for software to lock in those gains for us. But don't count on something like this. Okay. Next one, Adobe. When did we get in Adobe? We got in Adobe the same day. Here we are on the 7th. It was breaking down kind of through some shorter term support. Now, when we got in, it was broken a little bit more. By the end of the day, it kind of popped back up. But same thing, pop, plop, down it goes, gets our target, which is nice because then what is it doing now? Oh, well, it's got a big bullish candle. Now, it really hasn't violated anything that we would have been concerned about if we were still in the trade. Look, our 365 strike that we sold is clearing the heck up there. Okay, so really, even though maybe it's turned a little bit bullish, there really would not be concern. But on Adobe, we brought in $1.25. We said if we can buy it back for 30 cents, 36 cents, we'll be happy. We bought it back for 35 cents. Okay, so 90 cents times 3 contracts in a short period of time, including the weekend, that looks like about 5 days. Yeah, we were able to, that one added up to about $270 of profit. So not a big winner, but a base hit, we can always appreciate those. The last one we're going to do here was our CrowdStrike. No, we started with CrowdStrike. PayPal, we didn't tell you about PayPal yet. Okay, PayPal, Got in on the 7th again, one of our trades from last week. It hit its target this week on Tuesday. So it was a Thursday through Tuesday trade. And this was for a smaller credit. It was a single wide. And sometimes those single wides are helpful for those of you that are trying to build in a smaller account, where if you have those single strike prices, it's nice to be able to use them. Okay, so we brought in a small credit. We said we'd buy it back at 9 cents. We bought it back at 6 cents. Okay, so what would that give us? 26 cents on 21 contracts is about 588. Now, none of those values include commissions. You want to consider commissions in your overall expenses and if it's worth it to you. Okay, because this one would have had 21 contracts in there. There is a lot of commissions that would be charged there. And sometimes that's why people like to spread out the vertical a little bit. I wanted to keep this as a $1 wide specifically for those of you that are in a smaller account trying to build it. And Kelly says, yeah, it's base hits. They add up. They absolutely do. All right. Let's see here. Let's look at one that maybe is going in a way that we need some discussion. CRM, we're just going to let it continue to work. Okay, that stock's been showing a little bit of weakness. We're up on it right now. We just need to give it a little bit more time. Let's look at Disney though. Okay, Disney, and you'll notice these are in the bearish column here. So we did a couple of bearish trades so that we could kind of get a little bit more exposure to that side of things. So we have this short call vertical on Disney, 10 contracts here. We sold it for a credit of 62 cents. And now it's worth $1.07. So it's going against us. Okay. I want to have a discussion if we know yet if we're wrong on the trade. Because if we're wrong on the trade, we need to address that. Okay, so we're going to come over here to Disney's chart. I'm going to zoom in here a little bit. So same thing we got in here last week on the 7th because it was breaking through a support level, and it continued to. It didn't go down enough to hit our profitability target. Our short strike here is at 115. So at the time we got in, here, yeah, there was plenty of leeway, but the price action here yesterday had the stock closing above that. Now, I drew another line on here as part of my analysis. I drew this diagonal resistance line because I was like, yesterday, did it break through resistance? Well, it traded above resistance, but it wasn't convincing enough, maybe to some people, that it really was letting us know we're wrong on the trade. Now, had we had some bullish follow through today and say we had a green candle up in this area, then we might say, yeah, we're wrong on the trade. The leopard changed its spots. It's now upward trending. It wasn't before. And we would do probably what we would do in this situation, because we've done this before, is we buy back the short leg, that short put that we take a big loss on, or we buy back the short call, but we have a big loss on. We hold on to the long call and hope that we really were wrong and that it's now bullish and that it goes and runs up. But we don't do it because we're nervous. We don't do it because we're down on the trade. So numerically, we're antsy. We don't do it for those reasons. That's why I wanted to review exit conditions. At this point, there may be some traders that are like, I'm not convinced that it's going the wrong way yet. You might not be convinced. Now, I'll tell you, it's a little bit above our short leg, 115. It's at 116.16. And sometimes in a trade, we'll get some run-ups, even though the trend still continues down. So in this scenario, I'm going to give it time to work. It still has plenty of time to, 15 days before it expires. So it could certainly right the ship and take another tumble down. But I'll be watching it closely. Okay, if I need to get out because it meets a technical entry of maybe, like we talked about, breaking above resistance, forming a higher high, those types of things, then yeah, we want to say, okay, let's take some action here. All right. Any questions about any of those? If so, now is a good time to raise them before we move on to some new opportunities. Last week, I introduced you to the probability cone. And the probability cone, I drew for you with my great artistic skills, I drew for you a bell-shaped curve. And we kind of talked about one standard deviation from the mean. And you know I'm such a great artist. And so basically, this probability cone is kind of like the bell-shaped curve on its side. It's like it's tipped over, okay? And so what it's showing us as we go out in time, what the theoretical range is, where 68% of the data points might lie on the inside of this cone. And so what we talked about last week, and I want to know, did any of you practice using the probability cone last week? If you do, I want to give you some props for it. Okay, so put your name in there. Tell me that you did. Guy, let me answer your question here real quick. Why not put a stop on Disney? The reason you could, some people could, you could. The reason we're not going to here is because I'm going to monitor it. And if it makes a technical violation, I want to go back the short call and I want to hang on to the long call. But if I put on a stop to get out of both legs, it doesn't make it possible. Then you just end up locking in the loss, which sometimes we have to do. Okay, but that's the reason I'm not going to do it right now. Okay, so thank you. That was a great question. Somebody had asked about an average. Let me see what that question was here. Would I average the position? Suraj asks. Not really sure what you mean by that. If I average the position, give us a little bit more information there. And then Cameron or I can answer your question, see what you're talking about there. Okay. All right. Those of you that used it, look at you guys. Look at those new skills. Yeah, excellent. I'm glad that you did. And more than anything, it's just to give you another tool in your analysis. Okay. And there are tons of tools, and you might go, man, there are so many tools. Which ones do you use? And just become exposed to some of them so that when it's appropriate to look at it, you can. Now, I'm going to leave the probability cone on here, okay? Because I want to consult it, although we might not make any decisions that we're selling something outside of the cone, but I just want to kind of have it sitting there so that we can consult it, okay? Myron says you were distracted about the 4 indexes: the Dow Jones, S&P 500, NASDAQ 100, Russell 2000. Those are the 4 indexes that we typically take a look at. Okay, let's take a look at some new things here, okay? Amazon. Does anybody know about this little stock called Amazon? Well, Amazon, I mean, it pulled back a little bit here, went below its 10 and its 30, the blue and the red line, kind of came down to a support-ish area. I back up and kind of scroll this a little bit. No, it's not going to scroll for me, but you can see it a little bit better, okay? Mostly been bullish. We had our 2-day pullback a couple days ago. It got yanked on there. It's kind of fell back to some support, and it's back to the races again. Would look and see that it had a nice little run up. It had a couple of days of kind of pulling back, and then I would say yesterday was the close above the high of the low day, or the breakout of the flag, and that it's continuing to go. Now, when I decided to do this trade earlier in the day, it was only about half this candlestick size, okay? But I still think it has some room to grow. So we're going to do a short put vertical on it, okay? We're going to sell some premium. Let's go look at the trade tab. Now, Amazon, and actually the stocks we're looking at today, all of them have weeklies. And sometimes we can use the weeklies, and sometimes they aren't super liquid. Okay, Amazon has traded over 42 million shares today, so theirs are pretty liquid. So as we look on this one, we are going to use the September 5 options. Typically, sellers of verticals look for 20 to 40 days worth of time. Sometimes we have to go out to 50 days worth of time. And so 22 days worth of time, we're kind of at the low point of that window. But if we see something that still makes sense to us, if we see something we could still make a respectable return on that meets your rules, then we're going to go ahead with it. And I love the thousands of open interest contracts. And even look at the volume here today, thousands of volume. That gives us a tight bid-ask spread of a nickel. Oh, we love to see that. Boy, do we love to see that. Okay, I was looking at selling the 240. Let's see if this is, actually, that is not what I had in mind. What I had in mind is way in the money now. Hey, we'll start at the 225. We're going to have to start here at the 240. We're going to sell it, and then we'll buy the 245 as the hedge leg. Let's go ahead and pull it up. And I'm going to just, 124. I'm going to make this some easy math for us. We're going to go up a penny, see if we can get it filled a tiny bit higher, okay? Is this enough to give us a return we might be happy with? We would be risking what? We'd be risking 5 minus 125, so that would be 375. And in order to gain $1.25, what's the probability of success? Right now, it's sitting at about 69% that this option would expire out of the money. Now, I've got this probability column here. There's an in the money and an out of the money. I've got the out of the money here for us. So we can say, yeah, 69% chance that it would expire worthless. That's higher probability, okay? Now let's do the dollars here. Is it worth it for $1.25 credit to risk, what, 3.75? So 33% return. So some traders that may fit their rules and they're happy campers. If it doesn't meet your rules, you just say, okay, just going to pass on it. Okay, I have to do something here because this is the wrong trade. No wonder my numbers weren't working. I needed to be on the put side of things. I was working with 225. Man, did it really move that much? So you guys, thank you for helping me out there. All right, let's sell the vertical here. Okay, let's see what it is worth now. Ooh, not as much as it was earlier. Oh, okay. It has moved $1. We're gonna move it up and lock it in. If we're risking $3.95 to make $1.05, do you think that's going to be worth it? Let's run the number. Okay, 105 divided by 3.95 gives us 26%. Now, some of you, it may be worth it to you to do so. There might be others of you that are like, no, I want more than that. Some traders will look at how many days are left till the option expires, which is 22. Because it's changed and it's moved, I want to consider something else that we weren't considering earlier, and that is maybe not using the September 5s. I love the open interest here, but maybe we can do a little bit better, find something that meets our rules a little bit better, that gives us more than a 26% return. Let's see what we might do here. So same strike price, 225, 230. We'll sell that vertical. And all right, this one would give us $1.26. Now we know $1.25 gave us a 33% return, so we know that one actually might meet some people's rules better. Okay, I think it meets the rules that we use in this class. I think that's a little bit closer to it. So we're going to zap this one, and we're going to go with the ones that are actually the monthly expirations. Of course, there's tons of contracts out there. If we're risking $3.75, and in our class, we're willing to risk $1,500, how many credits or how many contracts can we do? If we say 1,500 divided by 375, we can do 4 contracts. So we're going to do 4 contracts here. Change this to first trigger sequential, create an opposite order, and then when would we want to buy it back? You get to decide. A practice that some traders use is the idea that if they can get a profit target like we talked about in the beginning, that we might be interested to say, yeah, let's lock in our gain, move on to a new trade, redeploy that capital. Instead of chasing all these little pennies out there, yeah, let's move on to something more that maybe in that same period of time might do better for us. So if we have a buck 26 times, and I'm going to go with 70%. If we have 70% of it, only 30% is left. So we'll multiply that by 0.3. That says buy it back at 37 cents. Okay, it's exactly what we're going to do. I'm going to buy it back at 37 cents. We just want one decimal there. And we're going to make this good till canceled. And then we'll just let it do its work. Okay. Let's go ahead. This is a bullish one. We're going to put it in our bullish short verticals bucket. Here it goes. All right. Lars says, there's also the time value of money. Yeah, absolutely, the time value of money. Okay, let's go to our next example. All right. We're going to do this one fairly quick because there's not a ton of analysis on it. Broadcom, AVGO. Now, I'm going to back up a little bit here so you can see a little bit more what it's been doing. Maybe not bring in as much of the probability cone, but we can see as it goes out further in time, the range where that stock might bounce around gets a little bit wider and wider. This was from something previous, a different class, not our class here, but the stock looks like it bounces off the 10-day moving average. So it has a little run up, pulls back, near the 10-day, runs up, pulls back, runs up. What's it doing now? Pulled back. Looks like it's trying to bounce off that 10-day moving average. Some traders might look at that as maybe being at support as far as using the 10-day moving average. There could be, if we wanted to, we could draw a little line in here. Maybe this was old resistance that's finding new support here. I kind of like using the 10-day just because of how often it's just has been going down there. Okay, so getting in on a bounce is a perfectly bullish concept here. Now, let's see how much the data has changed here. On this one, I was thinking of using the September 5s again. So lots of open interest on some of these stocks, which is great. We love that. And I was looking to do, let's see if these values have changed a lot. I was thinking to do the 290, 285. So 290 is right there. It's about a 28 delta. Let's see what the return might be. We sell that vertical. And it's a buck 37. Ooh, that's going to be nice and juicy. Yeah. Broadcom does not announce their earnings until the 4th of September. So could we be out of the trade before then? Yeah, we easily could be out of the trade before then and before implied volatility starts ramping up. If it's getting out there close to options expiration, that's likely what we'd see is implied volatility ramping up, which would make it a little bit harder for us to get out early with kind of a chunk of the profits. Okay. What would our return be here? All right, if we have a buck 35 and divide that by 3, what would that be? 365. That's about a 36% return. So a lot of people, yeah, that definitely would be their target. And what's the probability of success? 68%. Let's go see where 290 sits on the probability curve. So if we go out here a couple of weeks and I get my mouse, 290, or 290, there's our 280, so 290 is going to be maybe about here. There's 290 and some change, and would have to maybe go out a little bit in time. This doesn't expire for a much longer period of time. So it might actually fall inside the cone. In an ideal world, would love it to have the strike price, that 290, be outside of the cone. But sometimes you might find that it's going to be inside the cone. And that's why I said we're going to just consult the cone today. We're not going to make a decision based on it. Okay. So with this, if we can risk $1,500 a trade, I think we're only going to be able to do 3 contracts here. 365 is the risk we would take. We can do 4 contracts. Excellent. Here we go to our 4 contracts. First trigger sequential. Put in our opposite order here. And again, you determine the chunk. This is $1.35. And really, if somebody's happy at 50%, do 50%, right? If it can go 50% and you're out of the trade in like 3 days, some people are like, "Ooh, super, super cool." So on this one, let's go 60%. If we would be happy at getting 60%, only 40% would be left. So we'll multiply this by 0.4. We'll say we'd buy it back at 0.27 or 0.72, 72 cents essentially. Okay, which is a little bit more than half. Some of you that might meet rules for. Some of you might go, no, I want more than that. Let's stay in the trade a little bit longer, capture more, a bigger percent gain. But I like to give you different ideas. So we're going to put that in this bucket of our bullish short verticals. Now, Jack says on Amazon, we can go back there for a moment, Jack. Would you exit if Amazon goes against you by 50%? Some people might use that as a rule. Some people might give it a little bit more room. Something that we've done in our class here, we haven't done it for a while, but we'll say if it goes 100% against us. So in this last spread where it was $1.35, well, if it goes against us $1.35, that basically just wipes out our gain. But if it goes against us another $1.35, that would be the 100% against. And so some people might put a stop loss there. I would say experiment some of these rules in your paper money account so you can find the comfort level for you. Laura says, personally, I don't use stop exits on verticals. Right? You work with a strategy, you trade it in paper, you kind of get a feel for what feels right for you. Because what's right for Andy could be different than what's right for Laura. Okay, I'm going to do a bearish opportunity here since I told you we could find some bulls and bears. Let's see which one of these looks the beariest. All right, first one is MicroStrategy. Now, MicroStrategy actually had been doing pretty good. Some of these AI techs have not been doing quite as well at earnings. You can see at earnings, it was a disappointment. It rallied up, broke above kind of this resistance zone, but today it dropped right back down below it. Okay, so let's see on MicroStrategy. We've got earnings out of the way. Let's go see what some of the numbers might look like. With MicroStrategy, I was looking at using the September 15s. I don't think it's changed a lot since we did that. So we're going to go on the call side, do a short call vertical. And we've got a 32 delta, 35, 39, even a 29. So there's lots of choices here, depending on how conservative, depending on how big you want the probability of success to be. Sometimes you might develop a preference for that. Like we'll say anything above 60 is high probability. Well, maybe you like above 63. Maybe you like above 66, right? You can develop those preferences. So let's see if the ones I had pegged out here initially look decent. I was looking at, let's go with this one here. Lots of open interest. I love seeing that, even if we're just doing a few contracts. Let's go at the 400. Let's sell the vertical. Let's see if it gives us something that we deem worth our while. So we know this is going to be a 30-something return. We have $1.23, divided that by 3 point, what's that got to be, 77 is what we would risk on the trade, is 32%. If you're happy with 32%, that might meet your rules. It's a decent bid-ask spread here. It's less than 5%, which is something that we will look forward to. Now, I think here, if we risk $1,500, and our risk here was what, 377, Oh, we can almost do 4 contracts, but we are going to, this didn't go the right way, did it? Let's go to the sell. That brought it in on the buy. There we go, 123. We can do 3 contracts, boom, boom, boom. We're going to create an opposite order to buy it back. And again, we're just going to say, if we can get a chunk of the profits, let's get out. So with a $1.23 times, we'll go back to, if we get 70%, we've got 30% left. And let's go buy it back for 36 cents. Create opposite order. Put our order in there to exit, 36 cents. Make it good till canceled in the right column. And then we'll put this in our bearish bucket. Okay. I do think even though we're in quite a bullish market, we might see pockets where there's weakness in the market, weakness in the charts, that we might consider doing something that is swimming against stream a little bit, but not with the overall trend of the stock. Typically, we don't want to violate that. We don't want to pick on something that maybe is having just a little pullback, but has been otherwise bullish. We want it to be something that's got lower lows, lower heights, breaking through support, bouncing off resistance, looking for those common parameters in a technical setup. All right. Yeah, we thank you guys. You caught on to the fact that it was a long call vertical with the green when my finger missed, I guess, the sell, got the buy there. So we got it fixed. Excellent. Any questions on any of the things that we've talked about here? So we have 2 trades still working for us. One's doing well. One we're watching really close, that Disney trade. We're going to keep it close eye on it. Disney, we're going to keep a close eye on. CRM, we're just going to continue to let it work. Now, I do hope you have subscribed to our Trader Talks channel. It makes it so much easier for you to find our content. Somebody wrote into me recently that they're not new to trading, but they are new to the Thinkorswim platform. And you guys that have traded it, you know, and I remember, Cameron remembers, there was a bit of a learning curve, right, to Thinkorswim. It was so different than any platform I had traded off of before. And so it's so nice we have that paper money. And some people are like, well, I don't even know how to get to paper money or start it. Okay. So I did a little video here. It's in the bite-sized content, where to go download paper money, how to get it installed, how to move it over to the paper money instead of a live account so that you can begin practicing with it. Okay. So that's one of the benefits if you have been a subscriber, that you can find our content so much easier. All right. Cameron, thank you for helping us out in the chat here today. Now, I did not see a survey. If there was a survey and I totally missed it, please fill it out. But I am looking through here. I am not seeing a survey. Cameron typically will repost that if there were one. Okay. And so you guys, if you're still trying to get the knack of short verticals, practice in your paper money account. You can take every example trade we talked about here today and do it in your paper account and follow along, because that's how you get the confidence to work with the strategy. For some people, as short verticals can be an overwhelming strategy, but not everybody. I remember working with a guy years ago, and all he did was short call verticals. He didn't know how to even trade a long call or a long put. But he had mastered short call verticals, and it was his bread and butter strategy. And some of you might want that for yourselves as well. So follow Cameron and I on X. Make sure you're a subscriber. This was helpful to you today. Hit the thumbs up button. That allows other people to find our content. It helps them out as well. Okay. Mike Fairborn is going to be up next. He's going to be teaching on scripting studies. And he has been coming up with some really interesting things that you can do with ThinkScripts. So if you're up to the challenge, stick around for his class. He'll be right at the top of the hour. Okay, we'll see you next week. I'll see you guys tomorrow morning in trading a smaller account. Bye-bye.